Jobs data dominated headlines this week, and a critical Federal Reserve meeting leads us into the final week of October. I'm Joe Doe, reporting from Wall Street on Friday, October 25th. This week, a weak September jobs report and a more rapid uptick in weekly jobless claims suggests the economy may have been cooling slightly even before the government shutdown. I have two guests with me this morning. First is Brian Hamilton. He's the chairman of Sageworks, a company that provides financial analysis of privately held companies, and Alfonso Esparza. He's the senior currency strategist at OANDA, and that is an online currency trading firm. But first, we turn to Brian Hamilton of Sageworks. Brian, thanks so much for being on the show with me today.
Yeah, great to be here.
Brian, you say that we're seeing a significant sales slowdown for private U.S. companies. I know analysts are worrying that we're going to find out in data reports next month that the government shutdown hurt economic growth. But wasn't this beginning before October 1st?
Yeah, that's a great question, and it's not covered as much as it should be, Joe. We have found, as of about 3 months ago, that the sales growth rate of private companies is going down significantly. Now remember, we have to look at that in context because last year it was about 10% across all private companies, and now it's about 5%. So it's a dramatic decrease. Companies are still growing, but the rate of growth has gone down a bunch in the last year.
So, in your opinion then, will these private companies be affected moving ahead because of the government shutdown, through the end of 2013?
Yeah, well, look, it's a big source of debate. First of all, we always make the assumption that government always affects Main Street. I'm not a big buyer on that, okay? I don't think it's always true. I don't think the government shutdown will help private companies, but this trend started in the summer. We hope it doesn't continue, and I don't think those two are super important or related with one another right now.
Yeah, and Brian, finally, when we look to the labor data, I mean, is this really suggesting that a lot of these smaller private companies are still uncertain as to whether they're ready to hire more?
Yeah, they are. And it's really, look, I don't want to be too depressing in the morning here, but the truth is this. We are in a 4-year expansionary cycle, right? Things have gone well. But why are these guys sitting on the fence and not hiring people? And by the way, they're not even borrowing much money right now. They are very overhead sensitive or overhead reluctant. And if you look at their sales growth, it's pretty good. The profit growth, good. The margins are good. Check, check, check. There's externalities outside of their operating cycles that are making them hesitant. And I hate blaming Washington for everything, even though they're an easy target, for sure.
Right.
But I really think it's all this political corrosion and lack of cohesion on what are the policies going to be that are making people sit on the fence. That's my view anyway.
Well, Brian, thanks so much. We're actually going to turn now to Alfonso Esparza. He's the senior currency strategist at OANDA. Alfonso, thanks for coming on to the show today.
Thanks for having me.
So, Alfonso, we're going to turn to the Fed with the latest weekly jobless claims. We saw them yesterday, and the market's sensitivity to all the labor data that's been coming out, is at least since the 2008 financial crisis. Do you think the latest data, though, that we've seen will shift the Fed's opinion at next week's Federal Reserve meeting?
Probably not. I mean, they've been very rigid in their stance. I mean, they announced sort of through forward guidance what they want, and the tapering will happen. And then they kind of backed off and said, we won't schedule it. So whatever happens, probably won't change the actual schedule. Right now, they need a leader first. So I would expect the Yellen nomination to be announced soon, and that would be a turning point.
Okay, so at least for next week, you think we hear some of the same rhetoric we've been hearing in the past?
Yes. Yeah, unless there's a change in leadership, that's probably what's needed right now. So one of the reasons that everyone's looking at the Fed right now is because the market really wants some actions. There's been a lot of words. There's been a lot of words politically in Washington, in Europe, all over the place, but no, not a lot of action. So when the Fed said, we're going to taper, everyone ears perked up that, okay, there's action coming. So the delay has actually been hurting the dollar just because that action is much needed.
Right. So let's turn to that. We've seen the dollar index drop for 6 of the last 7 weeks. Do you think this trend will reverse anytime soon, given that it appears tapering is maybe 5 months away?
And it's something sort of related to what Brian said. So the economy was starting to lose a bit of its momentum, and the shutdown came probably at the worst possible moment. So it just basically you're losing momentum, and then there's nothing. So that really hurt the U.S. credibility, hurt the dollar. but we're back to this is a market that wants to see some action. And if the Fed starts to hint that tapering will happen, although this year is probably out, but at least that action in the future, 2014 March is where the market's thinking, then that will definitely turn the dollar.
Yeah, so essentially what you're saying is March isn't too far off, but we'll have to check it out. Thanks so much, Alfonso.
Thank you.
That's all for this Friday. Thanks again to my guests, Brian Hamilton and Alfonso Esparza. For The Street, I'm Joe Doe.